Buyers beware, I must say. And we've seen those videos of not just Apostle Alakija, I've seen myself, some of my colleagues, and all of that. Please be careful and do protect your hard-earned money. Look before you leap, or look before you invest. I guess that's the word here. Now let's go to the commodities space. We've heard, of course, what's happening with global oil, as well as yesterday we saw Mr. Wash hold rate. I don't know if that's a disappointment to President Donald Trump, but let's find out what financial derivatives company thinks about it. We have the analyst Halima Dediran joining us virtually from London. Halima, good morning. But I'm sure this hold stance of the Federal Reserve was largely expected.
Good morning, Ini. Thanks for having me. Yes, of course, it's largely expected. So the market already expected that the Fed would hold rates, and that's the fourth consecutive rate pause, and the first meeting chaired by Kevin Walsh. So beyond the decision, what is much more important is what the Fed communicated yesterday. And the first thing is that it's going to be a long high interest rate regime, because it's likely the Fed is moving towards price stability, which means it will be like a hawkish stance for a very long time. Another thing is, compared to the previous regime of Powell, we are going to see a less of forward guidance, because this new chair is saying the Fed spills too much. So we might see more volatility and less transparency when it comes to what the future move of interest rates as regards Fed will look like. And so what does this mean? This means that for investors, they will have to face a very high interest rate trend. And given the fact that the oil price is easing gradually, coupled with high global financial interest rates and a very uncertain, how can I put it now, global outlook, we might see that emerging markets like Nigeria could be faced with depreciation in their currency, more of capital outflow, because investors want to tilt towards US dollar-dominated assets because of the high interest rate. And so all this put together, we might see that the other central banks might want to do the same, because no apex bank will want to leave its currency excessively depreciating against the US dollar. And so, like stocks that are still growing might have an issue too. They might be facing some challenges, because investors want to move towards fixed income assets, dollar-denominated assets, and also people investing in real estate might face expensive, how can I put it now, outlook. So that is what is on ground for now.
So I was just wondering, Halima, if this will please President Trump, because I know that one of the reasons why the sentiment between himself and Mr. Paul weren't so good is because Mr. Paul refused to cut interest rates. And now Mr. Walsh is even telling us ahead that forward guidance is going to be, they're going to be tight-lipped on that, and that we should actually expect a high interest rate environment from the United States. So I wonder if he has consulted with Mr. Trump.
The thing is, it's a mixed situation, because as regards Trump, is about low oil price and also low interest rate regime. But given the fact that the new chair is more about inflation-driven decision, because for now the U.S. inflation rate is about 4.2%, and it's much more higher than what the country targets, that is 2%. So I think they are going to have like a negotiation or a discussion going forward. There are two things: either to satisfy the president, or to bring about a result that is much more beneficial for the total economy, meaning price stability and less of inflationary pressure, which is going to help the outlook and the performance of the US and even the global market generally. So I think it's a mixed.
They'll find a way around it. President Trump and
Exactly.
Mr. Walsh, they'll find a way around it. But one thing that we know is that at least with the cooling of the tension between Iran and the United States, we see reduction in global oil prices, and Dangote has helped us to translate that back home. So even jet fuel now, diesel, first of all, it was petrol. So I guess perhaps the consumers can have a little bit of breather for this period. We don't know what will happen tomorrow.
Yeah, so for the global oil price, it is expected because it's just like market investors are trying to price in the reduced risk premium because of the optimism about the diplomatic shift between US and Iran, which is going to it's expected to reduce the tension and increase exports, given the fact that one of the items in the MOU is stating that there will be opening of the Strait of Hormuz. And other things like the sanctions, the frozen funds, and Iran's nuclear programs. So I think all those items are listed in the MOU that is signed. Though there will still be a meeting tomorrow, so it will give us a broader look about what is going to happen next. But looking at the items, like the 14 items in the MOU, we'll see that at least it is balanced. The two countries are well represented in terms of what they want, but we still need to see how it goes. It's like a beginning of a good thing that could help in terms of oil price and inflation in the future. And looking at Dangote, I think he's trying to give us a positive outlook when it comes to inflation, because they already promised time-to-time review of his prices as global oil price changes. And I think in the first day of this week, he revealed the price for PMS, the gantry price, by lowering it by 75 naira, and also I think the coastal price too by 100,000 naira. And so in the midweek, he did the same for jet fuel and diesel, meaning that it's not only about a market decision or marketing strategy. It's just like repricing the prices across its distribution channels, which is very good for inflation. The only thing is that we might not see the one-to-one decline for PMS prices and diesel prices across the filling station, but definitely there's going to be a decline in those product prices, and this will help in terms of inputs and running costs for businesses, transportation costs for individuals and businesses too, which is one of the driven factor for this current inflation number that we had. So it's a good one for inflation, it's a good one for economic activities, and it's a good one for reduced cost for businesses and even individuals. So we have more money in our pockets.
Exactly, Halima, exactly. We have more money in our pocket, we can buy more liters of petrol to come to work. Thank you so much, Halima Adedinro, analyst with Financial Derivatives Company.
Thanks for having me.
Let's take a break now. When we come back, we'll be discussing ethical living. It's a project by a company, African Capital Alliance Foundation. Well, it's affecting the life of the youth, so it's very important. So let's talk about it after the break. Please stay with us.